We will be starting in a minute. Please hold on.
Yeah, good morning, everyone. We saw again some corrections in the US market that was indicating mainly on account of geopolitical concerns, wherein Biden canceled the trip to the Middle East. Some of the part of the countries they will not be visiting now. Earlier, Biden was expected to visit Israel, Egypt, various other countries, but now he will be visiting only Israel, and other countries' visit got cancelled, and that has acted as negative sentiment for the stock market. Apart from that, quite a few results came. Results were ahead of expectations in the US, but some company has sounded a bit negative for the futures, like United Airlines and all. So that has also had some impact on the equity market. Uh, the futures are also a bit negative for the US market, and Asian markets are also indicating some softer trend. But whereas on the other hand, uh, commodities are showing a positive trend, wherein oil has moved up by almost around $2. Same time yesterday, and apart from that, even iron ore is up by 1% and steel is flat. We are seeing bond yield moving up again. Yesterday it increased by 10 bips, and again today it has increased by 10 bips. So that is causing a concerns in the US market, wherein 10-year bond yield continue to move up. So overall seems sentiment a bit negative from the international market, or what we see that Indian market can also see some range bound trade today. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. From the last few trading sessions, we are witnessing that the Nifty is just struggling within the range of 19,600 to 19,840 levels on the higher sides. Today, looking towards the Asian markets and the world market, we believe that the Nifty is likely to open on a flattish note and range bound session can be seen during a day. As of now, Nifty is struggling at around 19,840 levels. Any momentum about that level on the closing basis will extend or witness some pullback rally on the higher side, which may take a Nifty towards 19,900 to 20,000 levels on the higher side. Whereas on lower side, as of now, we are witnessing that 19,770 would be the first support level. If it's break that level, then selling pressure is likely to be seen, which might take a Nifty towards 19,700 to 19,670 levels on the downsides. So the view is a bit cautious as long as Nifty struggles below 19,840 to 19,870 levels. Coming towards the bank Nifty, yesterday also we have seen the selling pressures from the higher level to from 44,700 levels, and Nifty has maintained the closing on its support levels towards to 44,400 level. Now going ahead, the support is placed at 44,340. Any move below that level will expect some more selling pressure or say the profit booking, which might take a bank Nifty towards 44,000 to 40 to 44,000 levels on the downside. Whereas on high side, as of now, the resistance is placed at 44,660 and 44,830 are the uh, resistance level on the high side. Coming towards the Fin Nifty, 20,020, 20,080 are the two resistance level we need to keep eye on it, whereas the support is placed at 19,950 and 19,900 levels on the downsides. Coming towards the stock specifics, Sri Pushkar really looks good on the technical front. From the last 6 to 7 trading session, we are witnessing a very strong pullback rally from 200 DMA, and now it has surpassed the 50 DMA also on the closing basis from the last 3 trading sessions. Maintaining a positive closing about the same volumes are really increasing along with the price momentum. So we believe that the technical setup is strong. Upside 235 levels can be seen in the near term. Current market price is 218. You can initiate a buy call at the CMP, maintain the strict stop loss of 210. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, more or less the data is the same. So no change here. Good part is 19,800 and 700 strike puts are witnessing good open interest built up, indicating good base building now, which was first happening at 19,500. That has shifted higher for about 200 odd points to 19,700 and 800 strikes. So we might see further buying, for Nifty up to the 20,000 mark. The only thing is the PCR in 19,800 still not above 1. So probably a couple of more days of consolidation and then some buying action. So we are likely to see more consolidation today. In terms of Nifty. From the stock specific front, we have seen some good buying in life insurance stocks of late. A lot of short covering action has been seen in HDFC Life, SBI Life, and the others. They are likely to witness further buying going forward. So the pack as a whole should move up. So HDFC Life, SBI Life, ICICI Prudential, ICICI GI, all of these stocks are likely to move up. So look out for the same. They are likely to give good returns in the next couple of trading sessions. Yeah, so that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Mazagon Dock Shipbuilders has signed a contract with Ministry of Defence for construction and delivery of one training ship for Indian Coast Guard worth 310 crores. This is marginally positive. On the result side, the Bajaj Finance result is in line with expectation. However, net interest margin declined by 14 basis points sequentially, but also because of lower cost to income, at operating profit level and profit after tax level, the growth was healthy at around 30%. Regarding NIM, company said that they are likely to further compress by around 30 basis points in the second half as the older low-cost debt gets matured and is replaced with new high-cost debt. Although company is confident that despite this, they will be maintaining ROA of 5%, which was at around 5.2% in the current quarter. We remain positive from long-term point of view as loan growth we think will sustain 30% in coming quarters. Canfin Homes result is broadly in line with expectation. Provision came at 72 crore versus expectation of 40 crores as it has some one-off component of 40 crores which pertains to the fraud which happened in its Ambala branch. Despite this, profit came in line with estimates. However, on the disbursement and loan growth side, there was a bit of disappointment. Disbursement declined by 10% year on year, and so the loan growth has been decelerating for last few quarters. Loan book grew by 16% year on year against a high of 22%, which was 4 quarters back. Gross NPA also deteriorated slightly from 0.63 to 0.76. We are neutral in the near term, but positive from long-term point of view. IIFL Securities, the brokerage company, result has improved. Revenue grew 24% sequentially. EBITDA grew 15% sequentially. Performance is good overall, but if we compare it with ICICI Securities or Angel, then it is lagging behind. But on the other hand, stock is available at much cheaper valuation at just 8.6 times trailing EPS. So we can expect outperformance in the short term. However, from a long-term point of view, we remain cautious on traditional brokers. ICICI Prudential Life Insurance result is below expectation. APE grew by just 3%, while VNB declined by 7% year on year due to a decline in margins from steady state level of 30-32% we have seen in last few quarters. This quarter it came down to 28% as the share of ULIP has increased from 45% traditionally to 41% this quarter, reduced from 45 to 41 this quarter, while the share of non-linked and protection mix has come down. I'm sorry, the ULIP share has increased from 41 to 45%, and simultaneously protection and non-linked has come down, and that has caused a decline in margins. So we are neutral on ICICI Prudential Life Insurance. Thank you.
Good morning. Zensa Technology has posted above expectation numbers for the quarter. Order book came at 194.8 million in dollar terms. The order book is high due to spillover of revenue from Q1, and there were some deals which were supposed to sign in Q3 got signed in Q2. Normalized to this, order book is slightly better than last quarter. Last quarter order book stood at 154.2 million. Dollar revenue came at 150.2 million, and EBITDA margin came in muted QOQ at 18.6%. The company aspires to be in the top quadrant. On margin front, the company targets to be at the mid-teen, which is around 14 to 16% in FY24. About this, the company would invest back in for future growth. Q3 is expected to be soft quarter due to furloughs. Outlook is neutral in the near term and positive for long term. LTTS has posted its result yesterday. CCQQ revenue growth came at 3.2%. EBIT margin came at 17%. With longer decision cycles and incremental headwinds from macroeconomic stress in various geographies, the company has downgraded USD revenue growth guidance for FY24 to 17.5 to 18.5% in CC terms versus last quarter guidance of 20%. On margin front, the company will continue to be in a 17% EBIT level in FY24 and get back to 18% in H1 FY26. Outlook is long-term positive. Tata Elxsi has posted marginally above expectation set of numbers for the quarter, with revenue growing by 3.7% QOQ and coming in at 881 crores. EBITDA margin came in at 29.9% versus QOQ of 29.6%. Stock is trading at PE of 58.5 times FY24 EPS. Thank you.
Good morning. Himadri Specialty Chemical Limited has posted the result, and result has improved for the quarter. Revenue reported at 1,005 crore, which degrew by 5.1% on a YY basis, despite the sales volume growth of 14.2% on a YY basis. The EBITDA margin has improved to 15.7% versus 9.7% in the same quarter last year. This was mainly on account of its strategy to move towards the value-added products that has led to increased margins per metric ton. The profit after tax reported at 100 crore and it was at 65.9 crore in the same quarter last year. The stock is trading at a PE of 34.4 times to TTM EPS. Today, IRM Energy Limited IPO is opening for subscription and closing on 20th October. The price band is set at rupees 408 to 505 at upper price band. The objects, the issue is of 545 crore, which consists of only fresh issue. And it is expected to utilize these funds towards the capex requirement, which will be amounted to rupees 307 crore, and 135 crore would be utilized for the repayment of debt. Company is incorporated in 2015 and it has a strong parentage of Cadila Healthcare Limited, which holds 49.5% stake in the company. It has a journey of more than 6 years in developing robust city gas distribution networks and connecting different customer segments in its existing geographical areas. Currently, it is generating revenue from 3 main geographical areas which has been authorized by PNGRB, that are Banaskantha GA, Fatehgarh Sahib and Diu and Gir Somnath. And it has been authorized for Namakkal and Tiruchirappalli in March 2022, which is expected to generate revenue soon. The Banaskantha GA and Fatehgarh Sahib minimum work permit target set for the set by the PNGRB has been achieved by the company, and it is well above these targets. And for these regions, it is expected to grow 2 times in the next 4 years, while the Diu and Gir Somnath and Namakkal and Tiruchirappalli GA, these both GAs are benefited with good road network, which will be observing high movement of floating vehicles as major highways pass through these GAs. And also these are the tourist attraction places. Also the urban population which provides an excellent opportunity to convert the prospective customers from other alternate fuels to natural gas. There is a lot of potential for residential customers to switch to PNG by FY24. For both these GAs, it expects 5 times of volume growth in the next 4 years. We are positive on companies' multifold growth, which is compared to other players in the industry, as it is further aiming to grow by its volume by 3 times, and by FY27. Which is on account of various opportunities available in these existing GAs as well as in the Namakkal and Tiruchirappalli. The issue is valued at 19 times P based on its annualized Q1 FY24 EPS, which is at a reasonable valuation compared to average P valuation of 18.6 times for listed peers. This we recommend subscribe to the issue considering its robust future growth. Thank you.
Good morning. CEAT Limited has its con call yesterday, whereby the management stated that the sales volume grew by 3.5% QOQ and 7% on YOY basis. This was mainly because of passenger cars and then passenger car tires, and then followed by truck and bus tires. Off-highway tires volume was subdued due to slowdown in Europe. Whereas in the domestic market, the replacement segment grew by 4% YOY, and the off-highway tires and passenger car tires saw double-digit growth, whereas two-wheelers and truck bus tires grew in low single digit. The raw material expenses declined by 2.5% QOQ, but in Q3 it is expected that the raw material may go up by 3 or 4% on QOQ basis. Mainly on account of higher crude oil prices and higher rubber prices. This quarter, due to benign input prices and stable selling prices, it resulted in gross margin expansion by 200 basis points. The employee cost and other expenses increased by 11% and 4% on QOQ basis. And this quarter export realization saw a marginal drop, and probably the export market is likely to improve in coming quarters. The capex for FY24 is estimated to rupees 800, and the debt stood at rupees 1,890 crores, which is being reduced by rupees 103 crores from Q1. At present, the stock is trading at PE of 15.2 times of FY24 EPS, and we are neutral in near term and long term positive on this company. Thank you.
There is a news carried by ET, which indicate that the CK Birla Company Orient Cement may sell it holding to Adani Group. The news is not yet confirmed by company, but if suppose this happens, then the valuation could be much higher. Currently, the stock is available at around $61 per ton, whereas the recent deal which has happened of Sanghi Industries was at around $115. Though Orient Cement is in South, so maybe a discount to Sanghi Industry, maybe at around $100 if it happens. Then also the price works out to anywhere between 275 to 300 rupees. So there is a potential upside from this, but still the news is a rumor. So there could be some denial also possible during the day of the news. It's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting prices in commodity to rise. One can initiate a buy in gold around 59,600 to 550, maintaining a stop loss of 59,300. We are expecting to test 60,000 on near term. Silver prices are also expected to test 72,800 to 73,000. So buying on dips in silver is recommended around 71,800 and maintain a stop loss of 71,000. Crude oil also we are expecting prices to test 74,50. So buying on dips around 7,300 is recommended with a stop loss of 70 to 72.50. In natural gas also, we are expecting prices to take support around 250 levels, and one can buy with a stop loss of 245. On upside, 270, 276 is the target we are eyeing for. In metal, copper also, we are expecting prices to test 708, 710. So buying on dips is recommended in copper also and maintain a stop loss of 698. In zinc also, as we are expecting prices to test 222 to 23. So buying around 219.50 is recommended with a stop loss of 217.5. That's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For USD for today's trading session, we are expecting sideways momentum. So for today's trading session, we are expecting 83.21 on the lower end and on the higher side, 83.31. So if market comes around 83.21 levels, so one can initiate a long position for intraday purpose with a stop loss of 83.15 levels. For the target of 83.25 and 83.29 levels, and on the higher side, one can initiate a short positions around 83.29 to 83.30 levels with a stop loss of 83.34 levels for the target of 83.22 levels. In Euro INR, one can initiate a long positions in the range of 88.07 to 88 levels with a strict stop loss of 87.76 levels for the target of 88.33 and 88.50 levels. In GBP INR, one can initiate a short positions if we get some pullback around 101.57 levels with the strict stop loss of 101.83 for the target of 101.30 and 101.15 levels. Thank you.